This video is being made on behalf of members of the TTP room, as well as prospective TTP members who are interested in learning what we do and how we navigate choppy times and market conditions, especially given things like what we saw last week with a bump in the market on stimulus day, and then the next day a pullback based on information that interest rates could be coming under pressure. Any type of a quote unquote taper tantrum can be seen and expressed in the charts that we look at. Having a process is what helps you navigate through difficult times and understanding when times are critical for you to either be a little bit heavier in your decision to trade direction or to be lighter, and how do we manage those trades over time. Starting with a process, we need to first understand what's happening and coming at us. The way that we do that, at least from a big picture standpoint, is to consult the 2021 economic calendar on Econo Day. It's a free resource to everybody, and it at least gives you information where you can make a determination as to whether you may or may not see volatility on any particular day based on economic information that may or may not move the market broadly. That being said, if we take a look at the coming week, you can see throughout the week, Monday the 22nd, Jerome Powell speaks. Tuesday the 23rd, Jerome Powell speaks. New home sales. Wednesday the 24th, durable goods orders, Jerome Powell speaks. So we're seeing a theme here. Thursday the 25th, you've got GDP, jobless claims, and then on Friday, personal income and outlays, international trade goods. These 3 days will likely have increased volatility. When Jerome Powell speaks, it gives you an opportunity. What kind of an opportunity does it give you? Typically in this type of a market, it will give you a day trade or perhaps an overnight type of trade setup based on how the market reacts to what this man has to say. The key to all of this is to be able to take all of your indicators, your sentiment, and come up with an idea about what direction or no direction that you want to take. The ES, which is our S&P 500 mini futures, will open up shortly to give us an idea. The way that we get an idea of how we look at the markets broadly is to start on a large time frame. Currently, this chart is set to a daily time frame. So these candles represent 1 day, and the time on the chart gives us a year view. I'm going to switch to a weekly chart. In other words, the candles that you see on your chart now express a week in terms of movement as opposed to a day. And the data that we have stretches back 5 years. We can go back as far as we'd like, but what information do we get? Well, we can see that we have obviously markets that move up and down, which is normal for how markets move. What we would like to determine is where are we at and where are we most likely to see what's going to happen next. There is no crystal ball. There is no way for us to be able to pick an exact top or an exact bottom. Anybody that tells you that they can is telling you a lie. So what we are trying to do is get a determination. One of the things that we use to get our determination is to use CCI, which is the Commodity Channel Index, in combination with RSI, or the Relative Strength Index. That's expressed at the bottom of this chart. That helps us tell what type of direction we may be moving. On a long time frame, we also like to apply Fibonacci retracements. What do Fibonacci retracements tell us? They give us general guidelines and expectations as to where things could go. On TradingView, which is has a free version of its software, or you can pay for a more sophisticated version, which is the version that I use. So if I'm going to draw a Fibonacci, I'm going to start at the bottom of this move, which dates back to the low of March 2020, and come to its most recent high. Its most recent high was just last week. And we get an idea if the market has reached a top and is going to pull back on a very large time frame, where could it pull back to? Now that we've taken a look at this larger time frame to give ourselves an idea, we can come into a closer time frame. So we'll come back in to the daily on the 1 year chart. Now I can expand this chart, and now I can start to get an idea of where expectations might come into play. So how am I going to apply the Fibonacci on a long-term time frame? I can just eyeball it right here and see where things line up. The .382 doesn't really give me any help. So what I'm going to do is I'm going to draw another one of these, and I'm going to take it from this most recent low, which is in October, and I'm going to work it back to the most recent high. Now, I have an idea of where things could go. What else do I use? What else can I use to determine, or at least give me an idea of where price could go? We use other indicators, indicators that are not necessarily important to me, but are important to other traders, larger traders, where we can expect to find some type of a reaction. The blue line that you see here is the 50-day simple moving average, or 50 SMA. This red line is the 200 SMA. If I want to look at shorter time frame and where the market might potentially pull back to, as you can see, the market is starting to slightly roll over here. These other lines that you're looking at are other indicators. This indicator happens to be, this blue stair step happens to be the 8 EMA, or exponential moving average. This is the 21-day. You can see that the 8 and the 21 have a correlation to where the market, the ES, will at least come to test an area to see if it can find an opportunity for it to either continue to break down or bounce and move back up. The stronger of the areas happen to coincide with the 50 and the 200 SMA. The other smaller indicators help give us idea of shorter term, where could things go. Now, to add or take out a little bit of complication to this, I will go back to the 5-year chart, and I will remove this large fib because it's not helping us in a shorter time frame scenario. So I'm going to lose that. I'm going to come back in to a 1 year, and now I have a little bit better of an idea, making the assumption that this happens to be the top. So if this market is to continue to come in, we can make some assumptions, or at least look for opportunity to see if the market is going to pull back to this area, which happens to be 35.85. And then we also have a Fibonacci level here at 36.91. So it would not surprise me if direction continues down and we come under pressure and you start to see negative headlines, etc., that this area will get tested, and that it would be reasonable to think that this area has the potential to be tested as well. Understanding the market conditions and applying the appropriate strategy is what we focus on in trading the post. What are some of the other sentiment indicators that we have available to us? Well, if you're a member, we have what's referred to as the squeezometer. The squeezometer is general sentiment. When the squeezometer sees numbers as high as in the high 60s, 65, 66, 67, sometimes into the 70s, we know that the market is very overheated. When we see sentiment indicators that read into the 30s, 35, 36, 37, we know that the market is oversold. This typically will coincide with our RSI and CCI indicator. When they cross over each other, given a direction, we can see a correlation that shows up in the chart. If you can follow the dotted line, you can see this day, which was the 18th of March, we started to have the market start to roll over. That coincided with the RSI CCI topping out and starting to roll back over. As you can see right now, the RSI CCI indicator is giving an indication of it going down. The problem, as is with everything, is where and how do we try to make this a trade? As you can see now, as we've been talking, the ES has opened up and it is currently pointing a downward direction. What would be the next area? If you were going to trade directionally, the 50 SMA would be a logical assumption as a target. Could this stop and reverse direction anywhere along the way? Of course it could, that's trading. A reasonable target, however, to see this cool off would be this 50 SMA as a first target. The next target, as we discussed, would potentially be around the 3691 area on the ES. How do we apply that to other stocks, as we know that the tech industry has been under a lot of pressure? So what types of strategies do we employ in trading the post? This is Microsoft. Microsoft is in a sideways pattern largely. If you look at these chartreuse lines here and here, these are areas where we look in the Trading the Post room to write condors. Writing condors is simply a premium collection strategy and saying this particular stock happens to be stuck and trading sideways. What happens in the case of a condor is that when we collect that premium decays, and at the end of a specific period of time, typically a week, what we do is evaluate how much of that premium we've collected, and then we decide to close our trades. Typically, our premium collection nets us somewhere between 50 and 80% of the total premium that we collected on a weekly basis for a stock that's trading sideways is a very effective strategy for building a small account. What are the other areas that we can look at? Well, if we are looking or we're talking about tech, we know that a lot of this is going to look very similar. Amazon, similar type of environment. And you can see here that Amazon has a Fibonacci retracement drawn on it from this high to this low. And currently the stock is staying within the channel of this Fibonacci retracement. There is no way to be able to say definitively which way a stock is going to go, other than for you to gather as much information as you possibly can to make a determination what direction you think the market is going, and then apply the appropriate strategy. If you want to learn more about how we navigate choppy waters or how we navigate markets that look as if they're about to roll over, or if they're about to reach a place where they're going to continue higher, please feel free to check us out at tradingthepost.com.